Lori, we knew this period would come, right? We knew that once we got into April, we'd start seeing economic metrics that more fully reflected what happened in the latter half of March. How surprised do you expect equities to be in the coming weeks when we get more of these?
Well, you know, it's interesting. The chatter with people I was talking to yesterday internally and clients, no one really understood why the market had been rallying so much. And that's really been the conversation over the past week is, you know, kind of what were the buyers looking at. So I think whoever it was that was actually doing this buying over the last week or so, they are surprised by this data. But frankly, I think a lot of investors have been expecting us to retest the lows. So I think it's a mixed bag in terms of who's surprised and who isn't.
So are you looking for a retest of the lows, or how much do you think this 50% retracement needs to be unwound given some of the empirical data that's rolling in?
So the way I put it is that I am keeping an open mind about whether or not we saw the bottom on March 23rd, but I'm not quite convinced. And one of the reasons why I haven't quite been convinced is I just don't think we ever got clear capitulation when you look at some of the sentiment indicators we track. And, you know, my favorite stat, you look at retail investors, AAII, bears got up to about 52% this time around. Financial crisis, they regularly hit 60% and got up to 70%. And I think that this will go down in history as something more akin to the financial crisis as opposed to just sort of a growth scare, which is where those 50% measures top out at.
Dan, we did see a school of macro desks who did, in fact, expect us to go back and retest some of those lows, but then they were taken aback by the speed and you could say creativity of the Fed and, to a lesser extent, Congress. So how much of that ameliorates the case or lessens the case for a complete retest?
I think that, you know, all the stimulus helps, and I think they're doing the right things. But I think the bottom line here is that, as Lori mentioned, you haven't seen the things in place that would imply, you know, a market bottom here. And I think there's some confusion going on in what you should focus on. I think that when you look for a bottom, you know, you're typically looking for some signs that the economy is getting better or it starts getting less bad. And we're so far away from that with profits and all the indicators crashing to the downside, you know, as we saw this morning. So we need to see, you know, signs that even in the high frequency indicators that those things are inflecting the other way. We're so far from that right now. And by the way, you know, this idea that we're getting this buying opportunity of a decade or of a lifetime, it seems far-fetched. When the market, it's hard to argue that the market is cheaper. You know, the problem is going into this. You know, the market was assigning, you know, the highest multiple in 2 decades on peak earnings late in the business cycle. So when you combine that and you say, you know, what's the potential downside in a correction, you have to take the multiple down to a more normal level, let's just say 15 times. You have to take those implied earnings down because anybody who follows, you know, cyclical companies like, you know, semiconductors or machinery stocks knows that you don't want to value based on peak earnings. You got to take those earnings numbers down, and when you combine that, it implies that there's still a lot more downside potential in the market. You know, you talked about stimulus, right? But stimulus, it talks about is an attempt to get the economy back to normal. But will the economy look normal, you know, 6 months from now? You know, 6 months from now, 8 months from now, my guess, if you look at, you know, other indications from the medical experts looking at where China is, that we're going to be, 85% of capacity back then. If you told people, you know, forget the next quarter or next 6 months, that, you know, 6 months from now, regardless of what happens now, how bad the data is, that the economy is going to be running at a sustainably 15% lower run rate, you know, that's basically a recession in itself. And then there's going to be second and third order effects that are going to be accelerating, even as the new daily case data and infection rate are actually slowing.
I mean, Lori, just listening to both you and Dan, I think, there's obviously consensus that there's a lot more bad news coming, whether it's on the virus, it's on the economy, on earnings, on the market. And so you've got this consensus trade saying we're going to retest those lows. It's no wonder we've seen a 25% rally. That's the pain trade, isn't it?
Yeah, and look, I think Dan brought up an interesting point on valuation. So our guesstimate for 2020 earnings is 135. Our guesstimate for next year is 153. And when we've looked at those numbers, we think you could have made an argument that if we were in the right neighborhood, stocks were cheap a couple weeks ago on March 23rd when we started to rally, but they don't look cheap anymore. In fact, on our 2020 number, you're back around a 20 times multiple. So I think it made sense, the rally that we have. I think you got good news on the virus. We did see some plateauing. The stimulus absolutely helps. It absolutely matters. But did we have sort of that valuation-induced sigh of relief, and has it played out? I think that's probably what we're dealing with here. Now we are confronted with, as Dan mentioned, those second and third derivative impacts, the skeletons that are starting to come out of the closet. I think it's very concerning that yesterday and today we are not seeing the banks trade up. We're really seeing that investors have managed to be surprised to the downside somehow. And that may be a combination of what's gone on in the quarter. That may be a combination of outlooks. But that's telling me that we've sort of exhausted that valuation opportunity the market at least thought that it had for a little while.